Good morning to all traders and welcome to another Markets in Waves video. Stavros is here, 11 of August, Wednesday, and today we're going to have a quick look on the index pound, oil, gold, and dollar against the Swiss franc. So, as we were expecting, ABC over here in wave 4, okay, Y04 I would say, and a continuation to the downside, right? We talked about this being 1, 2, 3, 4, and 5. It looks like to me that wave 3, yeah, it's already in. But what I want to do is just go a little bit closer to start to understand here what is going on. So what I currently see is this 1, 2, 3, 4, and a 5, right? And that might be a case, guys. Well, this is going to be the first move to the downside, right? For wave A, and then B, and then C. We might get a double 4 here, and then a continuation up for to complete this move to the upside, this correction to the upside. However, do know that it's not really necessary that we're going to see some sort of deep like this. Because the truth is that our wave 2 correction was nearly like 95% or so, right? So we can expect a very short correction in wave 4 over here, perhaps like some 5% or whatever, which means that we might just have gotten A and B, and we might just get a wave C over here for a flat pattern, and that's going to mean that, you know, this is going to be perhaps coming in very shallow and perhaps even ending fairly soon. But if we take wave 2 into consideration, we might also turn into some sort of W, X, and Y over here, just to ensure that we're going to last a little bit longer in these sideways markets before we continue higher up. Now, you know that we do see signals on the RSI and MACD, okay, and this signal is likely to actually get in validation once we break above the previous high at 93.20 or so. Until then, remain a bit more sideways, perhaps even biased to the downside rather than anything else. Now on pound, guys, pound is actually moving lower. We were expecting that move to take place, and we are, after finishing this flat over here, finally in wave 1. Now, with wave 2 coming in, usually waves 2 go down to the 61.8 Fibo retracement, and waves 4 go to the 38.2. I'm not saying that's always the case, it's just a guideline, but it looks like to me, we've got a 5, right? ABC, ABC, 1, 2, 3, 4, 5. That's probably a running flat here. And then 1, 2, 3, 4. Yeah, 1, 2, 3, 4, 5. That looks like a nice ending diagonal. So wave C, okay, might have finished here because this is 1, 2, 3, 4, and 5. Or it could be a case, guys, that also my wave B is here. That's my 1, that's my 2. Yeah, and that's then internally 1, 2, 3, 4, and 5 again. Yeah, and then I'm going to get the 3, the 4, and the 5. I'm going to move lower down. Okay, or it could be, and that's likely to be another scenario, W. We're going to get an X, and then we're going to get a Y down to 61.8. But as I said before, it's not really necessary we're going to get there. Now, the thing is that we don't really see signals on the RSI and MACD, apart from the fact that, you know, the RSI is below the 50 and the MACD remains, both the EMA lines are below the 0, and the histogram also remains below 0, but very close to it. So in either case, I'm looking at more downside, and what I will do also, I will just draw a nice channel over here, guys, and pay attention to, in case we get an upside, pay attention to the median regression for a potential continuation to the downside. Now we see we had a very nice bounce here, and that is looking like an ending diagonal, so perhaps a correction is expected here, regardless of the non-signaling nature of the two indicators. Now on the oil, we did talk about this turning into a WX and Y. We were expecting at least the previous low to be reached. To me, it looks like that's the case now. 1, 2, that's done in B and done in C. ABC, and then further continuation down might be WX and YZ. Yeah, triple zigzag. we actually ended the wave 2 down here, guys. And what is going to happen now is that we're going to start, that's the first wave, right? We're going to start seeing a short correction, and then we'll continue all the way up. And that is going to be treated as a wave 2, so perhaps the 61.8 correction is going to be a good level over here, since we had an attempt to the no, that's not an attempt. So we actually rolling down for the perhaps after doing the 67.82, they're rolling down to the 67.30. Okay, but this can be considered as a double bottom, guys, so that's why it's a quite good opportunity. However, you know, it might be a case where, because this is 1, 2, 3, 4, and 5 over here, right? So, and then we've got 2, then we've got 1, 2, 3, 4, 5, and that is the 3, and then you got the 4, perhaps, and then the 5 for A, and that might be our B, okay? And then we might just get our C down here, right? We don't know that. There's still more room to the downside, because this is intermediate wave 2 of a larger leg to the upside, and if we pull our Fibonacci over here, guys, you see that we can get a double 2 at the 78.6, which is around the 61.50. So I wouldn't be surprised if we do see either the ABC taking place or WXYZ, WXYXZ. Okay, now signals on the RSI or MACD, pretty much maybe some sort of a bias to the upside, I would say. Okay, is just purely because, you know, we have a double bottom over here, but you can see that there is some sort of divergence here, both on MACD and on the RSI. Maybe on their side, not as much, but these are the scenarios I'm looking. Now, gold, most of you expect prices to continue lower. I don't because this move down looks corrective so far. To me, that makes a very good level, to be honest, and comes exactly at the trend line channel as well. I'll look at this as one, and it looks like an A wave here, and it looks like we're gonna get another leg up for wave C, then most likely continue down for C. That's gonna be my 1, that's gonna be my 2, and we'll continue higher up. Now, obviously, it might be a case where we're going to remain close to this sort of median line over here, and it might be a case that you know, we might even go further lower down. But you know, as this is to be treated as wave 2, and with a 50 Fibonacci already done over here, that was the first, I would say that, well, the second attempt, then probably looking for a continuation down to the 61.8, yeah, either with C of B being done here or maybe higher, and from there we should be looking for some sort of signals for the continuation to the upside. Now, don't forget that, you know, we are still at 1 and 2 because my 2 didn't get invalid, because we're still, you know, above both the 1 and the 2 over here. But even if we were at 2, it should be okay. What I'm looking though is also the alternative that perhaps my 4, if of course we break below that level again, if we're going to go towards the 1680, that's going to be fairly obvious. We're going to have to recount this wave 4 correction and come up with a structure that supports this new future price action. Okay, but don't also forget that it might be a scenario that we might get a dip over here, 78.6, perhaps even the 0.9 or so, because it's a wave 1, okay, and then a wave 2. So it's a case that most people still think that you know, this is going to continue lower. So there's high conviction that this is bearish. For that reason, usually that's why waves 2 are usually deep as well. Okay, so that's for that one. And dollar against the Swiss franc. By the way, nothing on the MACD, on the RSI, on gold, obviously. Let's go out on the 4 hours to just remind you what I'm expecting here. I am looking for a flat pattern over here, guys. Okay. Oops, excuse me. Let me just do that there. Okay. So as you can see, looks like to me my A is done, and we are expecting now the B. yeah, and the B can go to this channel or can go to that channel up to 78.6 or so, or you know, a little bit higher. So I am in the short term a bit more bullish than I am bearish, okay, because not only we're expecting wave B to still complete, right, and then of course continue lower down with a wave C that might be an ended diagonal, or it might be just an impulse to the downside, and it was going to complete an ended diagonal. But we're also looking very impulsive over here, right? So it looks like to me my wave 1 is done, my wave 2 is done, and 3. So we're going to get the 4 and then the 5th one, okay? Until the 4th is in, we cannot really have a good estimate, good projection for wave 5. But once we see a correction, then we can use our Fibonacci tool from the beginning all the way up to 3 down to wave 4, and take the 38.2 Fibonacci extension and the 61.8 Fibonacci extension, okay? Obviously that wave C is expected to end above the previous swing high at 92.78, because that's my wave A. And I will be also looking very closely at this shorter term channel over here, yeah, which is connecting the beginning of wave A and then wave B, which would bring us very close to the 78.6. Should of course, or depends really on the timing of this upside move as well. But I wouldn't be looking for a price, excuse me, that is going to get us higher than that. Maybe even perhaps the 54, the 94, but that will be pretty much it. So short to medium term bullish, the medium term and medium to long bearish. Okay, so that's going to be all for this Wednesday, guys. Thank you very much for watching. If you have any questions, don't hesitate to leave a comment on YouTube section, and if you have an alternative scenario in mind as well, do leave this in the comment section. I'll get back to you as soon as I can. Thanks for watching, and we'll be here again tomorrow with another Markets and Waves video.